Hi, everyone. I'm Tom Mraz from the Illinois Department of Commerce. Welcome to this virtual workshop. We'll try to finish and take questions within an hour or so. The four agencies on the screen that you see are here to update you on resources available to separating employees. There's no fees, as the resources that we're talking about are tax funded. In fact, we used to say that you've already paid for these resources. It's our agenda to follow in this order, and presenters will introduce themselves. When questions come up, please put your questions in the chat pod, and we'll address them at the end. Little known fact. Unemployment insurance is funded by employers, not by employees, and not by your taxes. The main law that governs workforce benefits is called the Workforce Innovation and Opportunity Act, or WIOA. Sometimes we say WIOA when we're just talking, and when we say that, we mean WIOA. So this law covers adults, youth, dislocated workers, and spouses of dislocated workers. A dislocated worker is anyone laid off through no fault of their own. And at separation, you become a dislocated worker, and that makes you automatically eligible for these benefits. Now, workers leaving before the separation date are not laid off, and eligibility for them must be determined then. You have a window of eligibility, starting with your separation date to the next hire date of your next job, when you can utilize the WIOA services, including a no-cost training grant. Also, for people that would prefer to just get into their next job and get a paycheck coming in sooner rather than picking up a training credential, there are WIOA services, one-on-one provided services to speed up the time to your next job. But you have to take the first step. You have to attend a WIOA orientation, and the next speaker is going to cover that. But first, notice the link at the bottom of the page. This is the link to your web page, so write it down. There you'll find handouts for this webinar, a webinar recording that will go up in 1 to 2 days, where you can go back and review, and a dislocated worker survey, which helps us allocate funds. In other words, based on how people fill out the survey in terms of they are looking to take advantage of this service or they want to get a job in this area, the government will allocate funds accordingly. So please take a moment to complete it. Next, you'll hear from our local workforce area. And there's local workforce areas all over the entire country, but some are bigger and have more resources than others. The one that's the second biggest and has the second most amount of resources for people is the Chicago Cook Workforce Partnership, or CCWP. And now we're going to hear from CCWP. Marion Beatty.
Okay. Good afternoon, everyone. My name is Marion Beatty, and thank you, Tom. We are the WIOA Rapid Response Webinar, Workforce Services for Dislocated Workers. And I'm having some difficulties. Okay. Thank you. Again, I did state my name is Marion Beatty. I am the hospitality sector person for Chicago Cook Workforce Partnership. My title is called the Business Relations Specialist. I have decided to give you my direct number to the office because being in hospitality and coming from hospitality, I want to assure if you have any questions, you can call someone and share your concerns, and I can help you and expedite things as fast as possible. A little bit about the partnership is we were created in 2012, the Chicago Cook Workforce Partnership. We are the umbrella public workforce for the city of Chicago and Cook County. As Tom just stated, we're the second largest workforce agency in the United States. Partnership combines federal and philanthropic resources to broaden the research of impacted workforce development services. The partnership has helped place more than 60,000 individuals. That's what we do, free of charge, as Tom stated. And we also have more than 2,000 employers and administrates more than 200 million in federally and philanthropic funds. The partnerships network over 53 community-based organizations. We have 10 American job centers and sector-driven workforce centers. We serve 132 municipalities, excuse me. This is my first time. One of the things that Tom stated is that you will have to help us assist you. And we focus on our labor market region by you being valuable and having already skills that these could be transferable skills in any of these labor market regions, such as business and professional services, healthcare, if you wanted to stay in retail, culinary, and hospitality, information and technology, manufacturing, transportation, distribution and logistics, and construction. We found out that these 7 industries are career path, career laden, and have upward mobility for your skill set. And I just clicked something. Our vision and mission at the partnership is our motivator. We believe in our vision that every person has the opportunity to build a career, every business has the talent to grow and compete in a global economy. Our mission is to create, promote, and effectively manage a network of workforce development organizations that design innovative solutions to address business needs and prepares for and connects them to career opportunities. This takes a minute to load up because this is the way we look at our engine when it comes to the workforce. You being the job seeker, we have training initiatives. You will be given a career coach. Chicago Cook Workforce Partnership is over all of this, free of charge again. Then you will be provided some business service team to make sure your skills are up to date. You have the correct resume to match you with those employer services. Again, as I stated, you are valuable. No fault of yours. Have you been let go or furloughed? So your skills are still needed. And we call your skills, if you wanted to go into another industry, transferable skills. Again, business and professional services, healthcare, retail, culinary, hospitality, information technology, manufacturing, transportation, distribution, and logistics, and construction. Rapid response services are for laid off worker services. You are a unique type of person. Again, you are laid off through no fault of yours. So we in the industry consider you marketable and valuable. So we provide information and available resources and programming for WIOA dislocated workers administered under the Cook County Public Workforce System, or our local workforce innovative board on Area 7. We support affected workers who are facing an unemployment layoff at no fault, again, I said, of your own, with our reemployment efforts, including an opportunity to train and retrain. Most of our services, again, are free of charge if you wanted to get more certifications or train up your skills in the industry that you are already in. Dislocated workers are individuals who have received notice of a layoff, have been laid off due to company closure or reorganization resulting in a reduction in force of mass layoffs. That's why we're all in this together, and we recognize that it's no fault of yours. And as I can't state enough, being in the hospitality sector, you still have value. Your skills are needed and marketable. Rapid response services are set into action by receipt of the WARN notice. We owe a dislocated worker funds, and funding serves these layoffs, affected workers in their unemployment transition through workforce development program services. If you let us assist you, use our resources, we are hoping that you will not be laid off or unemployed for long. Workforce Innovative and Opportunity Act, WIOA, is for the laid off worker programs and services for dislocated workers are made available through the funding of the U.S. Department of Labor. These funds are already available. These programs are already out there for you, and we have the resources to assist you because of the WIOA funds, the public workforce system throughout the USA and through our American Job Centers. WIOA funding provides reemployment preparation assistance, job placement, supportive assistance, and opportunity for occupational training, leading to improved skills. If you need a certificate, if you need to be upskilled in your training, we can assist you with that. If you'd like to see where those transferable skills will take you to another industry, again, the Chicago Cook Workforce Partnership can assist you. What are your next steps as far as with WIOA? WIOA Dislocated Worker Program provides career services, resources, workforce readiness, training services, and laid off workers to the American Job Center. You must come and see us. We don't know you unless you come to us. And therefore, we have in Cook County alone over 10 American Job Centers located in the city of Chicago and suburban Cook County. If you feel, once you go up on the website, these workforce centers are at your disposal. You can either go to one in your area or you can look on the website and go to a workforce center of your choice. That's called the nearest, most convenient American Job Center for you to register. Bring your company separation letter, which validates your layoff and other required concerns. If you or other required documents, if you do not have that company layoff letter as of yet, that will not prohibit you. We again are here to assist you. Please call into one of the American Workforce Centers. Tell them that you don't have your company layoff. We could look up on the company and we still will be able to assist you until you are provided those papers. The sooner you see us, the better. Career success through WIOA is the career resource and workshops, resource centers, as I stated, that can serve you and work with you online or offline, which you will have access to computers. Our workforce job readiness workshops, which each agency will be able to provide for you a job readiness workshop for your convenience. You'll get and receive your career coach and job search assistance. We have a career coach that you will have that will walk you through anything and assist you with anything you don't understand. And again, that occupational training opportunities that we have that again will scale you up and give you training and certifications, again, free of charge because we do pay for training to upskill you if that is what you choose. Employment and career success is our business service team, such as myself or in the agencies that make connections with employers and jobs. Mock interviews are performed to make sure you are ready to go to that job interview, first on the job training initiatives programs. Illinois worknet.com. This is one of our intricate partners. This is our lead. If you go up on the Illinois worknet.com, you can do this when you wake up at 5 o'clock in the morning because it's 24/7 informational portal for workforce development website that helps individuals plan and move forward in their job search and careers. It can also direct you to find State of Illinois health insurance exchange or other support services. This portal will also assist you if you can't remember who I am and what I said. It will also inform you again of our workforce agencies and delicate agencies that are in your community. I cannot stress enough to let you know the resources that you have right at your fingertips, the partners that you have right at your fingertips to assist you. So do not hesitate. This again is the Illinois Workforce Service Finder that will assist you by putting in and filter your search by zip code, county, keywords for laid off workers. You will also be given on specific layoff page for your company, St. James Hotel Chicago layoff worker assistance page, which again will be right here on this webinar. I stress to you that we are Chicago Cook Workforce Partnership. We are also your partner. We appreciate what you have done and we value your resources or your skills already. So come and let's assist you either by locating us through our website, calling the number, or don't forget, my name is Marion Beatty, and that number is 312-603-0270 on the first page, which is my direct line. I thank you, and our next presenter.
Let me just add, I think I'm not muted, is that right? Let me just add that tomorrow we start phase 4 of the reopening. And what we know so far is the IDES, the Employment Service or Unemployment Insurance offices will not be reopening soon, but the American Job Centers, I would give a call first if you look those up, and each one has a phone number. You can look those up on Illinois WorkNet and make a call and see that before you go out and drive over. And
thank you, Tom. You are correct. We are open, but some of our centers may be still working virtually. So do not hesitate to give us a call. And if you call our other number, we do have a 1-800 number also that would be able to assist. I also check my personal phone every day. That's that 312-603-0270. And if you're not getting support from a call, just give me a call and I'll be more than happy to return that call. Thank you, Tom.
And then Marion unshares her screen. And do we have Andres Mendez from U.S. Department of Labor next?
Can everyone hear me?
I can.
Yes.
Okay, good. Thank you. All right, so I'll go ahead and introduce myself. My name is Andres Mendez, and I'm from the U.S. Department of Labor, specifically an agency called the Employee Benefits Security Administration. We use a lot of acronyms in government. We call it EBSA. But for your purposes, all you need to remember is that our agency essentially has jurisdiction over employer-sponsored healthcare plans and retirement plans. And so, going on here with our presentation. So the Department of Labor's Employee Benefits Security Administration, or like I said, EBSA, we administer the Employee Retirement Income Security Act of 1974, otherwise known as ERISA, which governs retirement plans and health and welfare plans. And so you may have rights to continue certain health and retirement benefits and or entitled to those protections when you lose your job. If your company provided a group health plan, for example, while you were at the company and you were enrolled in it at the time that you were laid off, you are entitled to certain programs, and you may be entitled to continued health care benefits for a certain period of time, which I'll elaborate on later on in this presentation. That is if you can't find a job immediately. Obviously, if you find a job immediately, it would probably be in your best interest, both in terms of convenience and in terms of finances, to go on that plan. And there are other options that I'll get into later on, which include, going on a spouse's plan or looking for coverage through the individual marketplace. And of course, something to stress here is that timely action is needed to protect your benefits. So essentially just, don't sleep on it. I will go over the timelines that you have to get certain things done. Okay. So when it comes to health insurance options, there are the four main options on the screen. We have special enrollment, COBRA, coverage through a government program, and individual healthcare coverage, otherwise known as the federal marketplace. So the first one, special enrollment, has to do with HIPAA, which many of you may be familiar with from when you go to the doctor, but a very little known aspect of HIPAA, which is actually, it was meant to be the main point of HIPAA because it's called the Health Insurance Portability and Accountability Act. It provides special enrollment rights in other group health coverage for workers and their family members. And so the most common way that you could take advantage of this special enrollment opportunity is if you have a spouse and they have health coverage through their employer. This allots you 30 days from your last effective date of coverage to go on your spouse's plan. Now, you'll notice a pattern as I go through the health insurance options here, because the timeline that you have, the timetable that you're going to be on, in pretty much all the cases, I think actually in all the cases, depends on when your last effective date of coverage is or will be. So generally, as a general rule, again, this is not hard science, so you'll want to check with your HR department. It may also be in the letters that will be provided to you or that have been provided to you. But as a general rule of thumb, if you're laid off before the 15th of the month, generally coverage is terminated that day. If you're laid off after the 15th of the month, it tends to be the case that health insurance carries on until the end of the month. You're aware of when your last date of coverage will be or when it was. COBRA is, of course, the second option. That's just short for the Consolidated Omnibus Budget Reconciliation Act. Really all this is a lot of people are under the impression that it's an insurance onto itself. It's not. COBRA is just a federal law that requires employers to allow terminated employees or employees who experience a reduction in hours, which would be the case if you've been furloughed, to continue coverage under the employer's healthcare plan for a period of up to 18 months, so a year and a half. And so, actually, just figured out they have specific slides for each one of these. Sorry about that. So, COBRA, so yeah, exactly what I said. It allows you to continue group health coverage. So something important to remember here is that if you, let's just say as an example, if you were enrolled in a healthcare plan, so a medical plan, a vision plan, and a dental plan, you can elect independently of one another. What do I mean by that? I can choose to continue my health plan and not continue my vision or dental plan if it's advantageous to me, monetarily, because obviously you'd be paying less. Or if you don't really need one of the other ones, of course, you could discontinue it. Another thing to remember about COBRA is that if you have multiple people from your family on the plan, so let's say you have your spouse on the plan, you have a kid or two on the plan, they can also elect independently of one another. So if one person especially needs it in the family, you can keep that person on while moving everyone else off. So something important to remember about COBRA is that, there's a timeline that you have to adhere to, and companies tend to be pretty strict on this because for obvious reasons, companies don't want liability. So if the person didn't get something done on time, well, that's just, an opportunity for the company to avoid liability and of course not offer COBRA insurance thereafter. So like I said, COBRA is available for 18 months. Yeah, there we go. COBRA is available for 18 months, and the participant can be charged up to 102% of the full cost of insurance. Needless to say, that's a reason why many people avoid COBRA continuation coverage. To be honest with everyone, usually the reason why someone would pursue COBRA continuation coverage, at least that we see in our office, is if someone has a chronic illness where they really, can't afford to be covered, where they like their network of doctors that are familiar with them and they don't want to, have to find a new one. They don't want to have to go out and shop for insurance. This is perfect in that situation if the person can afford it. And like I said, that's usually the most common way that we see someone take advantage of COBRA continuation coverage. And so this is something that the employer has a limited amount of time to let you know about. So from your last effective date of coverage, the employer has 44 days to furnish a COBRA election notice. It's basically a letter that will just tell you, you're entitled to COBRA continuation coverage, and it'll go into minutia. You can read into it if you'd like to. I encourage you to read into it, but just know for right now that the employer has 44 days to furnish it. If they fail to, that is actually a violation of ERISA, at which point I highly encourage you to call us at our offices. If you look at the red handbooks that are available online, I believe they're available through the site that Tom Ross pointed out at the beginning of the presentation.
Yes, it's on their webpage.
I believe it's the second page. I'm sorry, Tom?
I had to unmute again. Yes, it's on their webpage that we showed there.
On their webpage, so. Yeah. So on your webpage, if on the second page of that red handbook that has to do with, of course, retirement and continuation of health coverage, there are numbers. The way that it works is that you call those numbers. You'll be routed to your nearest regional office, which is ours in Chicago. There's nine other benefits advisors there, and we'd be more than happy to help you out. So you would call us and let us know, hey, my employer hasn't gotten the COBRA election notice to me, at which point I will call the company and kindly remind them of their fiduciary responsibilities. And so the participant will have 60 days to decide whether they want to elect COBRA or not. So these 60 days is kind of tricky. If the employer emails this material to you, you'll have 60 days from the email. If the employer mails it to you, you'll have 60 days from the postmark date on the envelope, right? So you can actually waive your right, which means you could say, no, I don't want COBRA. And if you're still within the 60 days and something comes up, meaning that, let's say you end up having to see a doctor, or you end up in the hospital, God forbid, and you figure out that, oh, hey, I've got like a couple $1,000s in medical bills, it may then be prudent of you, or it would be in your best interest to elect COBRA and maybe take the economic hit, then have to be saddled with, tons of medical bills and not having had insurance. So again, 60 days to elect whether or not you want to continue COBRA. Now, something interesting about this, and this is a recent development that I've been asked to highlight, is with the COVID-19 crisis, the government passed what has been called the CARES Act, right? And so it's meant to address certain aspects of, someone's health insurance, retirement plans, and other ways that people can be affected when they lose their job. And so what the government has said is that anyone who has lost their lost employment due to COVID-19, which this layoff pretty much just have to do with it because obviously the conditions created by COVID-19 have led to a decline in this sector momentarily, hopefully. Therefore, whoever was laid off during this period of time due to something related to COVID-19, which this is, they will have 60 days from the end of the declared national emergency. That's pretty generous because I do not know when that will be. Obviously, this was declared back in March, but there's no end in sight. So you will actually have 60 days from the end of the declared national emergency. Obviously, you should do this as quickly as possible if you want to pursue this option, because the way the COBRA works is that once you actually pay the premiums after you've elected, which you'll have 45 days at a minimum, the slide does not say it, but there is usually a grace period associated with this 45 days. So it's 45 days at a minimum. Generally, you could get up to a month in grace period. So it could be up to 30 days in grace period. That you would want to check with your HR, but just know at a minimum you'll have about a month and a half to pay once you have elected COBRA. That timeline hasn't changed at all. And so once you pay the premiums, coverage is reactivated, and then it's retroactive back to the date on which you lost insurance. So that is the reason why it's clearly in your best interest to elect COBRA and pay for it as quickly as possible. And so these are extension of timeframes. Of course, I already went over this. We're filing a claim for benefits. That is the end of the national emergency that I referred to. And that's it. Additional COVID-19 protections. So, like I said, in March, the Families First Coronavirus Response Act, otherwise known as the CARES Act, the law contains certain provisions related to employment-based health plans and health insurance issuers that offer group health insurance. So they are actually required to cover diagnostic testing for COVID-19 without cost sharing, meaning that there are no deductibles, co-pays, or co-insurance that would apply to this procedure, and without requiring pre-authorization. So this includes urgent care visits, emergency room visits, in-person and or telehealth visits to the doctor that result in an order for an administration of a COVID-19 test, including one rendered by an out-of-network provider. So that's actually pretty good. The law also allows health HSA, so health savings accounts, which I don't, that really is on a case-by-case basis. Some people have them, some people don't, or some people don't make use of them, I guess. They're HSAs that are eligible high deductible plans. They cover telehealth and remote care services without a deductible, or with a deductible below the minimum annual deductible otherwise required by the Internal Revenue Code. If you guys need help with any of this, feel free to call us, or also feel free to call the carrier. They will probably have more information about this, but we can always get you in contact with the appropriate people to speak to, and try to make sure that you know what rights you have under the law, and then of course make sure that you're familiar with your specific health plan. And so under these laws, special distribution or loan provisions due to COVID-19, including increased limits and extended repayment periods, may be available for participants on some plans. And so for more information about this, we encourage you to visit the COVID-19 response page, which I can provide the URL if anyone is interested in looking at this. Continuing here, the health insurance marketplace is obviously another way, and I mentioned that at the beginning of the presentation, for you to find health coverage after you've lost your job. And this is obviously for yourself and for your families. And so in the marketplace, you can compare coverage options to see what your premium, deductible, and out-of-pocket costs will be before you decide to enroll. basically the way that it works is that this can be accessed via the web. This can also be done over the phone. You used to be able to do it in person, but I don't think that the offices are open due to the pandemic. You can also do correspondence, which I encourage you not to do because it takes quite a while. But if you have to do it, just know that it's an option that's out there for you. So the way that it works is, assuming that you do it online, or over the phone, is that you'll be asked a series of questions. And based on those questions, the people from the marketplace will determine what kinds of plans to recommend. They'll try to limit it maybe to 2 or 3 plans, maybe even 4. And the rules are basically the plans have to be laid out, or the plan features have to be laid out in a way that is easy to compare between one plan and another. And then it's up to you to decide what plan suits you best. And so for this, you will have 60 days, again, 2 months from your last effective date of coverage to request enrollment in one of these plans. And continue on the marketplace. Right. So the date that coverage will start depend on when you select a plan. I believe this is one of those things. If you enroll in a plan before the 15th of the month, well then, coverage will start essentially following month, right? So you'll have insurance on the first of the following month. If you wait, that could affect the day that your coverage begins. So just be aware of that. Continuing here, there are other coverage options through a government plan. So when you fill out the marketplace application, which is why I suggest that even if you're thinking about doing COBRA, I highly suggest that you also explore the marketplace option. You will also find out if you and your family are eligible for other free or low-cost coverage from Medicaid, which is of course administered individually by states, and or CHIP, which is the Children's Health Insurance Program, which provides health coverage for minors, so people under the age of, I believe, 19, and their parents. And so you can apply for and enroll in Medicaid or CHIP at any time of the year. So for this one, there is no time limit, but just know that, of course, income affects your eligibility for this. And I believe all the questions, or most of the questions that you're asked have to do with your income. All right, so that is the end of our healthcare portion of the presentation. And like going back to the beginning of the presentation, our agency also has jurisdiction over retirement plans, of course, a very important aspect of an employee's benefits. And so, like I said, ERISA protects the assets of Americans who participate in retirement plans. This is, of course, millions of people. Dislocated workers face 2 important issues when they leave employment, and these are, access to retirement funds and the continued safety of their retirement plan investments. So you'll want to keep current on any changes your former employer makes, including, well, not only the ones that they make, but also the ones that you make, probably more important. So one of the common ways that a company or that a plan loses track of someone is if they move and they fail to change their address. That could result in complications because obviously if the employer does not have your address, they can't get certain information to you, right? So if you have a 401k, for example, that you wouldn't be monitored, in theory at least, you wouldn't have the ability to monitor the performance of the investments, you could lose money, et cetera, et cetera. So it's very important to keep up on that. Not only that, but you'll receive information about changes to the rules of the plan, about any company mergers that might be happening, blackout periods, which is when you don't have access to move your assets from a risky fund maybe to a less risky fund, right? Things that you would want to be able to do. ERISA does not require that retirement plans provide lump sum distributions. Lump sum distributions are possible only if the plan documents specifically provide for them. Generally, if you're enrolled in a 401k, or sometimes companies call it a profit sharing plan, or another type of defined contribution plan, just know that that's usually what people refer to as a pension, as a traditional pension. Your plan may provide a lump sum distribution of your retirement money when you leave the company. However, if you are in a defined benefits, again, a pension plan where you will receive a fixed pre-established benefit at the normal retirement age or at a retirement age stipulated by the plan documents, so generally 65. Some people are able to get it at 62, depending on the industry they work in, some age 60 or 55. These type of plans are less likely to allow you to receive money early. Moving on, I'm almost at the end of my presentation. One of the options that you have available to you in the case of this is referring to a 401k, a direct contributions plan, which is where your employer every week or 2 weeks takes an amount of money that you've designated out of your pay before taxes and is supposed to deposit it into an account. For this, if you leave an employer before your retirement age, which for these plans is 59 and a half years old, whether or not you can take your benefits out or roll them into another tax qualified plan like an IRA or another account will depend on what type of plan you're in. If you're in a defined contributions plan, again, like a 401k, and you leave your employer before retirement age, in most cases, you will be able to transfer your account balance out of your employer's plan. So if you decide to do this, you can roll it over into an IRA, which means that you can ask your employer to transfer your account balance directly into an individual retirement account. This is usually with a bank of your choosing. If you already bank with like Chase or Bank of America, whatever the case might be, you can speak to a professional with that company, and you could just ask them, I'm looking into opening an IRA. I'm sure they'd be more than happy to talk to you about it. And you roll your balance over into that IRA. You don't incur any penalties. You could roll it over into another retirement plan, meaning that if you get lucky and you find another job, they have a retirement plan. You can roll your balance over into their 401k or their retirement plan. And that is, of course, assuming that the employer accepts those transfers. I have never run into a company that does not allow you to do this, to be quite frank with you. So I don't foresee this being a problem. If it is, give us a call and we'll try to figure out if there's, or what other course of action you can take or what we would recommend. You could take a lump sum if it's available. This essentially means cashing out, quote unquote, cashing out your account. You may need to pay income taxes on this. Generally, this hinges on at the federal level, you always pay it. So if you even get to the normal retirement age and you decide to take it out, then you'll pay 20% of federal taxes. But what hinges on your age is whether or not you'll get a 10% penalty. And so if I'm under age 59 and a half and I go take money out of my 401k, that is income. And of course, I will get penalized for taking a withdrawal under the age of 59 and a half, under the retirement age, because you have to remember these plans are created with the intent to encourage people to save for retirement. So what do you do if you want people to save for retirement? You penalize people so as to dissuade them from taking money out before the right time. One thing that you should also keep in mind is that you can also choose to not move it from your employer's plan. So just be aware that some companies, in their rules, they have a minimum amount that you can have in the plan before they automatically distribute it. Generally, it's $5,000. If it's under if the balance is under $5,000, generally plans will have a provision that requires the plan administrator to simply distribute the money, and then then you have a certain amount of time to actually deposit the money into another retirement account. Otherwise, you'll face penalties if you're under age 59 and a half. Or you could just keep the money if you want to, if you really need to. Who am I to say what you should or shouldn't do during times of financial distress? But just keep that in mind. If you have specific questions about this, about the time frame, or if you're in this situation, again, we highly encourage you to call us. Our agency is well known for answering the phone pretty quickly, so this shouldn't be a problem. Here's our contact information. I will stay here for a couple of seconds if you want to write this number down. Of course, it's a toll-free number, and again, I want to stress, I know my predecessors have said this before, our services are free of charge. I think it's because of the fact that our agency handles or has jurisdiction over retirement plans, I think people automatically assume sometimes that there's some kind of fee associated with this. I'm not sure. I think that's the most probable reason, but there's no fee associated with anything that we do. It's all paid for through your taxes. Let's see here. I didn't speak about a pension specifically, a defined benefits plan. I don't think that that's an option here, but if it is, just know that you know, same things apply. You want to keep your employer or your union aware of any changes of address that you might have had, any information like that, and they should be able to provide information about vesting requirements, just of course the minimum amount of time that you have to have in service in order to be vested for a pension whenever you reach retirement age. If anyone has any questions, again, feel free to reach out to us. At this time, I will my presentation and pass it on to the next presenter.
Okay, Andres, thanks much. Now I'm going to run the slides for our IDES presenter, Gladys Selmo, and I believe I have them here.
Thank you, Tom. As Tom mentioned, my name is Gladys Anselmo. I'm with the Illinois Department of Employment Services, and what I'm going to do today is give you a broad overview of Employment Service Program and basically the how-to on how to receive benefits and secure your benefits through unemployment. Unemployment insurance is the state-administered program. Many people believe that they pay into unemployment. They often confuse unemployment benefits with Social Security benefits. The unemployment benefits that people receive are based on insurance policies that are required by your employers to pay. So workers do not pay into the employment program. Next page, Tom. People always want to know if they're going to get the exact same amount of money that they would be collecting on the job, and the answer to that is no. Unemployment benefits are based on the last 18 months of work. And that would include all employers during that period to determine what your wage base amount is, which would mean the amount of money that you're going to be receiving from unemployment. It's important to report all employers, even part-time jobs, because it could increase your benefit amount. As you can see, the base amount of money, the minimum amount of somebody can qualify would be $1,600 in a base period, which would be a quarter, and then in another base period, another quarter, at least $440, which would qualify the person for the minimum unemployment. Unemployment looks at each quarter of income to determine the benefit, and in some cases, there is the ability, if there's insufficient wages for an employee, number 3, Tom, please. If there's insufficient payment in one quarter, we do look oftentimes to something that's called the alternative base, which allows the worker to qualify. So there is that sort of latitude with that. Your benefit begins the date of your first valid claim. It's important to remember to apply as soon as you become unemployed and not wait, because that means that your benefits would be delayed. So the longer you wait, the longer it takes for your benefits to begin. So you should apply as soon as you can. And your benefits are good your claim is good for a full year within the 1 year that from which you apply. That does not mean that you're going to be receiving payments throughout the entire year, but many times people go back to work and then they need to come back to unemployment. They can pick up where they left off if there's any wages left. Next slide, Tom. Each individual is different. Many times people that work in the same location compare. There's minimum and maximum benefits. The minimum benefit for an individual is $51, and a correction to this slide, which has not happened, the maximum benefit now is $484. It doesn't mean how much you make is helps determine what you're going to receive, but the maximum amount that you could receive is $484. That does not include if you added your spouse for a benefit or your child. You can only have one or the other, either one child or one spouse. You cannot have both. And yes, we understand that families sometimes have more than one child. Unfortunately, you're only allowed to receive benefits for the one child. When you file your unemployment claim, it's important to remember that you do it as quickly as possible, and there's a number of ways of doing it. Next slide, please. Because of the pandemic, our local offices are not currently open. We do not have a time when they would be open, so the best way for someone to apply for benefits would be to go online to Illinois Department of Employment Services. The website is available to you 24 hours and apply online. We also do have a claimant services number where the claimant service department will take your claim over the phone, ask you a series of questions, and help you get your claim online. It's very important that right now during this pandemic, wait times are a little bit longer than normal, so we ask that you please be patient if you're looking to receive services from the phone. Next slide, Tom. When you're filing your claim online, it's important that you have your Social Security card, your driver's license, or your state ID. Why is that important? Because the system is going to ask you to register, and in order to verify who you are, it's going to use your state driver's license and ID and your Social Security card to validate that information as to who you are. And as I mentioned previously, we look at the last 18 months of where you've worked. So it's important to have the employer's name, addresses, and the dates that you worked for your employer, and also the reason why you were separated. That could be you were laid off, you could be still working part-time, you could have voluntarily left, or you could have been fired, all of the above. So you need to make sure that you have that information ready when you file your application online. Next slide, please. One of the things that will be asked on your application is if you're receiving any pension or retirement benefits, including Social Security. Many times you're allowed to receive these benefits as well as receiving your unemployment benefit. It just needs to be reviewed to determine whether the employer's contribution portion would be deducted from your unemployment. Social Security at this point is the only benefit that you can receive where it does not affect your payments. So you can collect Social Security while you're collecting your unemployment. It will not affect your benefit amount. Additionally, if you're claiming your spouse as a dependent, it's important to make sure that you have your spouse's name properly, her Social Security number available. We do check to make sure that there are no wages on record for the spouse. Sometimes people forget that the spouse may have had a part-time job for 6 months, and the spouse could then qualify for unemployment themselves if they're unemployed, and they would not be, you would not be allowed to use your spouse at that time. And with regarding your dependent child, it's important to have your child's birth date and Social Security number at the time of the application. The reason it's important to have all this information handy is our application has a timeout, so if you take longer than an hour to complete the application, you will be timed out. So it's important to have all that information prepared before you begin the application process. As I mentioned, you cannot claim both a spouse and a dependent child. Next slide, Tom. After you complete your application online or on the phone, what would happen next is IDES is going to send you what's called a UI letter. That letter indicates the information that you provided for you to verify. It's going to show the wages that were reported by the employer in each calendar year, each calendar quarter for the base period year, meaning that 18-month period that is covered by your claim. It's important for you to review those wages because it can happen from time to time that wages are missing, or if you had a different employer or a part-time job, it may not be included, so it's important for you to review that. The UI monetary determination, meaning the unemployment monetary determination, is your weekly benefit amount, and that benefit amount is in addition to any dependent amounts. Benefits are provided to you in the form of either a direct deposit if you have bank information, or a debit card that gets automatically sent to you when you apply for benefits. Those are for the individuals who do not have banking availability to them. It's important that if you are going to use direct deposit, you put in that information as quickly as possible. You can go to our website. On the same website you filled out the application, you can go in and enroll in direct deposit. The reason that we encourage direct deposit in all cases is that once you certify, the money is deposited directly into your account within 2 to 3 business days from your certification. So the money gets to you faster, and there are no fees involved with direct deposit as there can be with the debit card. The letter that you receive will also indicate your first certification dates. It's important for people to realize that getting the letter and getting the debit card does not mean that money will arrive. You have to certify for benefits every 2 weeks. The UI letter will indicate the very first day that you must certify for benefits. And what that requires you to do is either go online and answer a series of questions, or you will contact our teleserve, which is a voice-activated phone system that will allow you to certify for benefits. And you will do that every 2 weeks that you're unemployed. Once you've complete certifying either online or on the phone, you will receive your benefits within 2 to 3 business days, either in your direct deposit if you've put that in, or on the debit card that you've received. Benefits are paid on calendar weeks, so it's important if you pick up a part-time job that you keep track of the days that you work, because you'll be reporting your certifications from Sundays through Saturdays. That's how the week looks for unemployment. Tom, next slide, please. Okay, and basically this is just what I talked about, the direct deposit and debit card. Please put in your direct deposit as quickly as possible, because what happens is if you delay, the money will be put on the debit card, and then sometimes you're going to have a hard time trying to get that money back from the debit card company when you put in your direct deposit later. So we always encourage you to do it as quickly as possible. Next slide, please. Here's an example of a UI letter that we talked about. The important things to note here is your name and address. Make sure that it's correct. You're going to see your claimant ID on the right-hand side. That's very important for any information you deal with IDS. And the very important date is your first certification date. You will be given a day of the week for your biweekly call or certification online, and your first date. So every other Wednesday for this example, you'd be certifying starting on June 9th. Okay, next page, please. So as we discussed, it's important for you to keep that letter and to make sure that you are on top of your certifications. If you go more than 2 certification periods or 1 month without certifying, people do forget to certify and wonder why their payments, your application will close and you'll have to reopen it again, and that will prevent you from getting your benefits in a timely fashion. So we always recommend that you keep the UI letter handy and track your dates to certification on a calendar. If you do it on the phone when you completed your certification, the phone automated system will tell you the next day that you're going to certify. If you do it online, the confirmation page will have the next day for you to certify. But it's important you keep that online, because if you do not certify, you will not get paid. During the pandemic period, one of the things that has a little bit more flexibility is if you were laid off due to the pandemic, you are not required to serve a waiting week. A waiting week was a period where you would not get your benefit. That waiting week would be provided to you at the end. That is being waived right now, so you will get your Met benefits as soon as you certify for the bed. You will not have to be waiting for that. Tom, next slide, please. Okay. The best way to certify, as I mentioned earlier, is to certify for weekly benefits. You can do that from the IDES web page, which is the link right there. You can also certify via teleserve. The teleserve numbers have been expanded due to the pandemic, so you can certify as early as 3 a.m., not 5 a.m., and through 7:30. If for some reason you do not certify on the day that is on the letter, you're able to do it that same week on Thursday and Friday, which is the makeup day. So that's what you would be able to certify and not fall behind on your receiving your benefits. Next page, please, Tom. This is an updated version of the website. You can see that there have been some things added to address the pandemic, which is the Pandemic Unemployment Assistance Program, which we refer to it as PUA. To file your claim, you would go to the first box where the gentleman is there, where it says file an unemployment claim, regular or PUA, and then once you get in that website, it'll direct you under regular unemployment. From what I'm understanding, that the group that we're dealing with today will be filing for a traditional or regular unemployment. You will also access this page here if you want to certify for benefits. You would just use the second box, which is certify for benefits, regular unemployment only, and that would be for the people that are participating in the workshop today. And at the very top right-hand corner where it says sign into my account, that's where you would log into to register for direct deposit. You would enroll and modify your direct deposit right there. Next page, Tom. As you can see, when you go back to the website and you want to certify for benefits, you will go to the link that says certify for weekly benefits. There's going to be a series of 10 questions. They're redundant. You'll get them every time you certify, but it's going to ask you general questions like, have you looked for work? Are you able and available to work? Did you work? Did you receive any pay during that time? Are you collecting benefits? Once you answer all those questions, you will be able to complete the certification and receive your benefits. Next slide, please, Tom. There are times where some employees may fall into different categories of eligibility. One of the important things to remember is that you must be involuntarily unemployed or underemployed. Being laid off is an example of involuntary unemployment. You must be actively and available to seek work. You must be able and available to seek work. So if you're injured or you had surgery or having a baby, you are not going to be able to receive unemployment because you're not able and available. But if you have a doctor's note that says you're able and available, then you can receive benefits through a reconsideration program. The next 2 points on this regarding completing registration to create a resume and job link and certifying the unpaid week is something that at the present time we are not requiring people to do. We recommend that you do that because Illinois Job Link does have resources available to you, and they have a resume tool that helps you build a resume, so it'd be a good tool for you to do, but it's not going to be a requirement that prevents you from getting paid. Typically, if you had not done those things, you would not receive your benefits until such time that you completed those tasks. But during this pandemic time, those 2 requirements, the waiting week and registration for Illinois Job Link, are not going to keep you from getting your claims. Next page, Tom. So as I mentioned, it's important to remember that while you're collecting unemployment, each of the weeks you must be willing and able and ready and suitable to work for work. You have to be able and ready to work. If for any reason you're unavailable for some reason, you need to indicate that when you're certifying. And that could be if you take a family vacation or you have to stay at home for a sick child and you wouldn't be available to work. That would be an example of when you're unavailable. As I mentioned, the law requires that you actively seek work. You're required to keep in track the jobs that you have been looking for. As later on in the presentation, we're going to show you a worksheet that you can use. You can keep it on hand. You can keep it on Illinois Job Link. That's another tool that keeps your information for you. The Department of Employment Services can ask you for your work searches at any time, so it's important that you have them available to you. So it's important that you save your records for at least 1 year that you've collected unemployment. Next slide, please. So as I mentioned, you need to maintain your work search histories for 1 year, has passed from the end of the week. And like I said, you can either do it at an Illinois Job Link or you can do it on a work search form. Next page, Tom, which is on page 18. And this is what the work search form looks like. Next slide, Tom, please. Yes, and as you can see, the kind of information you can keep is the date that you contacted a potential employer, who you contacted, or Department of Personnel, or if it was a website that you contacted. If it was a method, was the internet, put the link of the company or the website you visited. the type of work you saw, and the results. Did you submit a resume? Are you waiting for a call back? Did you have a phone interview? And just keep track of that information. Next slide, Tom. It's really important. I know that many times people seek part-time work to help things move along while they're unemployed. When you claim that you're claiming unemployment benefits and you are working part-time, you have to report the earnings that you work during that time period. And that means you have to report the gross wages. If for any reason you earn more than 50% of your individual weekly benefit, so for example, your weekly benefit is $100. If you earn $51, anything above 50% will be a dollar for dollar reduction until you reach the WBA amount, and then you would equal zero. So in other words, what that means is if you earned $51, you'll get to keep the $50 that you earned, and you will receive $49 in the benefits, which is the partial benefit that you receive for that period. If you earn more than your weekly benefit amount, you will not be compensated for that week of benefit. Next slide, please. This also goes, however, detailing that your wages for the week are equal to or greater than the amount of your benefit, which you talked about. It would eliminate your benefits for that week. However, it won't affect the maximum balance. When you look on the award letter, you're going to see that you have a maximum benefit amount of money that you can receive during the 26-week period of unemployment, and it won't impact that money. So you're not going to lose that money by not receiving benefits for that week. If you work and you receive over the amount of your weekly benefit, the system is going to think that you're back at work, and so in order for you to certify the next time, you're going to have to add what's called an additional claim. When you go online and add it or you call in, you're going to file what's called an additional claim, and it's going to ask you for the period of time that you worked within that 2-week period. So you would just add, I worked 5 days or I worked 4 days, and then once you add that additional claim, you will be allowed to you would continue to certify for benefits. It's important to realize that if you are given a dependent allowance, you're only going to receive that dependent allowance or the spousal allowance or child allowance only if your benefits are payable. So on the weeks that you do not receive benefits because you've exceeded your benefit amount, you will not receive your dependent allowance. Next page, Tom. As I mentioned, here's an example of what the IDES debit card looks like. It can be blue, it can be red. I think now the color is red. You may opt to receive benefits by direct deposit or debit. We strongly encourage, if you have an option of direct deposit, that you do that. As we reiterated, electronic payments are made 2 to 3 business days. Please remember that holidays are a part of Saturday and Sunday, so people sometimes get knocked off their schedule, so they have to really look at the calendar. As I mentioned, after you file your claim, the debit card will be automatically issued to you and mailed to you. If you use direct deposit, keep the debit card, but you don't need to use it. Money will not be put on that card. It's important that when you fill out your claim that you consider perhaps having your state and federal taxes deducted. Unemployment benefits are taxable income. You will receive a W-2 statement or a 1099-G at the end of the year that you will use to file for your taxes. If you have not paid the taxes, then you'll have to pay them at the end of the year or have that deducted from whatever income you have coming your way. Next page, Tom. As was mentioned earlier, the Department of Employment Services works with programs, as were previously mentioned, like the Workforce Innovation Opportunity Act, WIOA. We work with a variety of different employers who either participate through our office or keep us abreast of opportunities that are available. Right now, it's a little bit tricky because our offices are not available, but we do receive information, and you can contact our office or go online and through Illinois Job Link and see what resources are available. The sooner you register with a training program, as was mentioned better, the sooner it will be that you can receive benefits. Next page, Tom. Here are the Illinois Job Link, which I mentioned to you right now. You can use it to track your work searches. You can see what jobs are available for you. And it's a good tool to use right now with in-person interviewing being a little bit difficulty. The Agile application, you can access it anywhere, so anywhere that you can get a internet link, you'll be able to access it. Next page, Tom. Okay. Okay. This, as we mentioned before, completing your registration. This responsibility has been waived for the short term. It may come back, but at the present time, we are not going to delay your benefits because you have not registered with Illinois Job Link. Next page, Tom. This is the next page is a screenshot of Illinois Job Link. Okay, and you can see some of the tools that are available to you. The resource page has general information about potential jobs, a section for employers to add things, and for employees to find a job. So it's a really good tool to use when you're looking to transition from being unemployed to employed. Next page.
Gladys, can you hear me?
Yes, I sure can.
I was looking for a mute button. We have a request from the HR manager to make a comment.
Sure.
Marcus, can you help us out there?
Hi, I'm not, are you guys able to hear me?
Yes.
Yes.
Hi, this is Marcia. We have a couple of questions. One that has come up quite frequently is on the certification, it says holiday pay, and we're not sure how that relates to, you know, PTO and vacations. We've paid out associates their PTO and vacation benefits, and the question is that going to affect my weekly benefit?
Yes, it will. That would be considered wages. So when they report them, that would affect their wages. So if, for example, they wanted to wait, like let's say they just were laid off and they wanted to use their vacation week pay first before they applied for benefits, they could do that.
Okay, so as it relates to the team that have balances that were paid out on the 19th, and when they see holiday pay, in our mind, we're thinking, oh, a typical holiday. And they're answering, no, I didn't receive holiday pay. But then that question is, where do they put that if they didn't work? And the question section is saying, did you work? Well, they haven't worked. They've already been laid off, and they just got a payout.
Yeah, unfortunately, they're going to have to report the payout on the certification. So it's been happening a lot. A lot of employers have been frequently sending people sort of blind checks in their view, the employee's view, and they didn't realize it was a holiday pay that they were supposed to get. And so what we asked the claimant, as soon as they receive it or are aware of it, that they report it on that week's certification. What we don't want them to do is employers will report all the wages that they've given in the employee, and it's IDS will not be able to determine what that is. So what will happen is the employee might, when the wages arrive, we might question what that is, and it could stop their benefit. And because we want to make sure that they don't have to be considered in overpayment mode where they have to pay the money back because they received unemployment while they're receiving pay from the company. So if they report it as soon as they're aware of it, that should help address the issue.
Okay, so even if the week that they're certifying doesn't apply to the week that when they received it, you know, they're certifying and they received this on the 19th, then well, they've already done a certification that involves the 19th. So
right.
Do they report it under holiday pay or do they report it under wages?
If they are being paid for a holiday, like let's say for example, today's my last day working, but you never paid me for Memorial Day, and I received a check for Memorial Day, I would report it as a holiday pay and under the time when I'm certifying next. Because what will happen is it's not going to be, you know, if the question is raised, they can show us a copy of the check. This is what happened, but this is when I received it, and that should address the issue. But many times it's hard for human resource departments and payrolls to be in line up with when the employee is certifying. So there is that sort of latitude. We sort of get that paperwork sometimes trails. And what we've been asking, as soon as the employee becomes aware of it, or as soon as they receive the payment, to let us know. We've been having this problem with PPE payments as well. Employees had no idea that they were going to get a PPE payment for a day or a week, and they just got it a surprise check. They had no idea that was coming because the company had no idea that they were going to be approved.
Right.
So, right. So yeah, we're being a little bit flexible that way.
Okay. So I would advise them to report those vacation and PTO payouts under the holiday pay would
Yes.
be the best. Okay.
Yeah.
At the next certification, because they may have missed one, as long as they get it reported. And that it will impact whatever upcoming benefit week, it will impact that based on how you explain the
Right, and sometimes if you're anticipating it, like for example, some companies ask their employees to take their vacations up front before they collected unemployment, and many did, and they waited till they completed their vacation before they applied for unemployment.
Yeah, so our associates wanted to hold on to those balances, thinking we'd be able to bring them back and have something, you know, to fall back on, but
Sure.
that didn't happen.
Yeah,
I
no.
believe we had another question in here. Let me just check the screen. There's another question in there as it relates to if they certified in March and they were brought back to work at the beginning of May. So do they file a new claim? How do
No,
they start over?
no. What they can do is file what's called an additional claim, and the additional claim will open up. When you open an unemployment claim, it's open for a full year from the date that you filed that claim. So if they've gone back to work, they filed in March, and then they worked from, let's say, April 1st through May 30th, then they would file an additional claim and report that additional time that they worked, April 1st through May 30th. And then they'd be able to pick up where they left off.
Okay,
So they do not need to file a new claim. It's an additional claim.
When they log in using their same credentials, is there a drop-down box that says file an additional claim?
No, what's going to happen is when they go online and they open the claim is going to open up and have all their information pre-populated. So then they just go down to the section where it says dates worked, and then they update those dates worked, and it'll itself become an additional claim.
Okay. All right, perfect. Thank you so much. I think one of our associates on is, and that was one of the questions that they raised. Sorry to interrupt.
Okay, no problem.
Marcia, this is Tom.
Hello, Tom.
Marcia, do you have a number of people there that are all focused on the same internet connection, webinar connection?
I believe so. We posted the link last Thursday, so I'm not sure if we'll get more participants for the 2:30 session. I'm not, if that's what you're questioning.
Marcia, the actual webinar platform here says there's 9 connections. Should I increase that because there's a number of people around one screen at your office?
Oh, no, not at the property, no.
Okay, good. Thank you.
You're welcome.
Okay. Tom, you want to do the next screen? I don't think I have much left to my presentation. Just reminders for the benefits of job seekers. The services that are provided are at no cost. Employers connect with your resume and Illinois Job Link, which is something for you to do and is something that's available for you 24 hours, 7 days a week. Next slide, Tom.
And again?
And I think you're done. And for the I believe it was Marcia, I guess, from Human. If she needs any specific guidance or any specific questions, Tom, she can connect with me through Tom, and more than happy to help her staff navigate through her. Be happy to help her.
Okay, thank you so much.
You're very welcome.
Marcus, I'm going to leave it on the address of the web page. So that folks, if you haven't had an opportunity to write down the link on the bottom, that's where you'll find your handouts for the meeting. And this is just the last chance to write that web address down. If no one has anything more, do we have any other questions to answer from the pod? Then if no one has anything more, thank you for joining us today. And we wish you all the best going forward.